So we're really thrilled to be doing this to the extent that we can be thrilled about the content. But so most of you are here as members of the Farm and Ranch Stress Assistance Network Northeast. We, the advisory team for FRSAN Northeast, felt that the material of this webinar was really important enough to share, that many other things we would rather have in place before we start an e-learning and webinar series for those of us who are in the Stress Assistance Network needed to be set aside so that we could get information out to those who interface with farmers and equip you all with as much information as possible, because so much of what we're going to cover today is really time-sensitive material. What we're going to invite, through a survey afterwards is more thinking and reflections about how to evolve and mature this over time. But we just want to stay at the top that we're really grateful to have everybody here, and that the scope of this webinar is going to be very grounded in the Farmer's Guide for COVID-19 Relief that our friends at Farmers Legal Action Group pulled together. They are members of this network as well. And this was pulled together in collaboration with Farm Aid, Rural Advancement Foundation International, who is also a member of our network, the Intertribal Ag Council, the Indigenous Food and Ag Initiative, and the National Sustainable Agriculture Coalition. Before we dive into the subject matter itself, one thing we just want to lift up that we suspect we'll explore together as a region in further depth in the coming weeks and months is the idea of understanding this crisis in the frame that we often think about when we think about working with farm communities through natural disasters. Farm Aid as an organization started in the 1980s in the midst of a crisis that was overtaking the entire sector. And between that experience and what we've known in our work with natural disaster recovery over several decades now, is that these types of moments become existential threats for farms and ranches of all kinds. It's a moment where the nature of the structures we operate in are revealed, are sometimes hastened or worsened. So people who fall through the cracks are often the most marginalized to begin with, but it's also a time when it becomes even more important that those of us who work with farmers are providing them with accurate information and have in mind some of the common, I don't know that pitfalls is the right word for it, but common experiences we know to be true in times of crisis. And we will lift up those where they're relevant as we move through this, the content of this. But just from the top, want to say that this is a really critical moment where you all in the work you do become all the more important in making the difference for the farms and ranches you touch. The other thing I think we would say is, it becomes really important the role that a community like this can play in sharing information about what we're learning about how programs are rolling out on the ground. Many of the programs we're talking about, certainly not all of them, were created very recently. Or there are program implementation regulations that have been changed to try to meet this moment. What we learn as a community and being able to connect the dots between what you are all learning and trying to help individual farms helps those of us who are connected into policy advocacy arenas make better policy and make the fixes that are needed to make sure the support is getting to the farms and ranches who need it. And so just want to put that in mind. The last thing we'll say that I think is really good fodder for this network in coming e-learning opportunities is that there are stages to disaster recovery. They're going to look different for different farm communities. But for example, we often know that the worst impacts start compounding a year or two out from when a disaster actually hit. And that those of us who are embedded in the farm communities themselves, the role our institutions play become really important down the road when all the federal and sort of general public attention has waned. And we also know that there is a sort of stress, mental health, emotional roller coaster that farm communities often experience as they move through different stages of recovery. And there's quite a lot of literature and best practices that I think we can keep developing programming around. Again, this webinar is really going to focus on programs themselves that farmers are needing in this moment, but just want to lay out that there's quite a lot here for this network to dig into it together. And so we're really gratified to be able to start this conversation. I'm not going to take any more time. I'm going to pass it right over to our friends at Farmers Legal Action Group. So Stephen Carpenter, I'm going to pass it over to you to talk through this guide. You're on mute.
That mean mute button. So I'm Stephen with FLAG, Farmers Legal Action Group, a nonprofit law firm that works with family farmers. A lot of you know us. And I'm here with Lindsay Keene, and we're gonna kind of work through what we've called the Farmer's Guide to COVID-19 Assistance. And so here's the logic of what we've done. Becomes clear soonish, right, that this is going to turn out to be a major crisis for farmers, for family farmers. And then it turns out Congress creates a large number of confusing but significant programs. So we decided to try to write an essentially, I hate to use this word, but comprehensive guide to assistances available to farmers. And so when we wrote it, we were thinking it needs to have a family farm focus. You're not going to see a lot of effort for us to work out and explain payment limitations, for example. But it's got to be a family farm focus. It needs to be detailed. And that is to say, as I always warn people, it's dry as dust, but you will know in the footnotes where we reached every conclusion we drew. And so we tried to get as specific as possible in understanding what are fairly novel and confusing problems regarding these programs. We also hope to make it essentially accessible to everyday folks. It's not written for lawyers. It's written for everyday people to try to sort of get the gist of the programs and how to use them. So we hope that farm advocates use it. We hope that farmers use it. And we too, in addition, it's both an effort to sort of assist farmers directly in understanding the programs and being able to assert their rights, but also, if you read it closely, I hope you see policy possibilities and advocacy work that we can pursue that will maybe change these programs as they go on. So understanding them, understand their legal basis so people can use them and we can think about them going forward. This is a long piece. What you also can find if you go on our website or FarmAid's website is essentially a 4-page, extremely condensed version of this information that's in a sort of a table form. And I think that will be useful for any number of people. The last thing I would say is that we hope to keep this updated. This is already our 2nd edition. I anticipate that there will be enough changes going forward that it will necessitate a 3rd, not just tiny little changes. We encourage you to ask us questions. The questions actually help us to understand the problems as they're evolving. And also, if we don't know the answer, we'll look it up and get back to you. Questions are sort of a vital way that we figure out what it is that people need to know. And so with those thoughts in mind, feel free to ask us questions at the end. Feel free to email us with questions. That's what we're here for. And with that, let's move on to the programs themselves. Lindsay's gonna take us through what we know about USDA programs.
Thanks, Stephen. Hello, everyone. I'm Lindsay. Happy to be here today. I think we're going to start off kind of the substance of these programs, as Stephen mentioned, with funding that went to USDA. And a lot of the programs, though not all, that we're talking about today originated with the CARES Act that was passed at the end of March. And part of that act designated a couple pots of money specifically to USDA. And in the CARES Act, there was $14 billion that was to go directly to the CCC, the Commodity Credit Corporation, and another $9.5 billion that was to go to USDA and then directly to farmers. So there's a lot we don't know about how this money is being used, but what we do know is that those pots of money, USDA has come out with what it's calling the Coronavirus Food Assistance Program, or CFAP. And CFAP kind of has two sort of wings to it. The first are $16 billion that are going to be direct payments to farmers. Now, the details of how these payments are going to be issued, those haven't been released, though we're expecting that possibly next week we'll get some official rules. But we know that this money, so the $16 billion, it has to be for actual losses. And this could be from either price or supply chains that have been affected by COVID-19, or if there's been lost demand or conversely an oversupply. And so we expect that part of the rules that are going to come out with this are going to require some showing of actual loss. And we don't know what that documentation will be, but it's important to, any farmers you're working with to be thinking about how you document the effects of COVID-19. So that's that first wing of CFAP, and the second part of it is what's being called the Farmers to Family Food Box Program. And this is a smaller amount of money, it's $3 billion, and essentially the government is going to be purchasing fresh produce, dairy, meat directly from farmers, and then those will be distributed through different nonprofits and organizations throughout the country to get to people in need. For this program, we know there's already been an RFP, a request for proposal that has come out on that. We don't know if they're going to be doing more of those down the road. But again, we're expecting more rules on both of these programs to be coming out fairly soon, though I suppose we can't say for certain. So that's kind of the funding that was designated for USDA, and I would just say, as Stephen mentioned, we're going to try to keep updating as those rules come out, and I'm sure Farm Aid and a lot of your organizations as well are going to be thinking about that. So pass it back to Stephen. Oh, Stephen, I think you're still on mute.
That would be 2 for 2. A couple quick points about those programs before we move on to the individual recovery rebates. We're getting questions from people with a very good question. First of all, is taking this money going to make you ineligible for anything else? As we know with disaster programs, sometimes there's a little bit of a concern that there'll be double dipping. And for all that we know right now, to do, say, the USDA CFAP program is not going to affect your eligibility for SBA programs and vice versa. It inevitably, when you take money or participate, it's going to change your financial situation. So conceivably, it could change your eligibility for various things, but there's no sort of, oh, if you take A, you can't take B, so far as that we know regarding USDA programs affecting other programs. The other quick question that we've had about this is, are people going to have to sign up with USDA and get a farm number? And we don't know for sure yet. Obviously, for a lot of producers, that's already done and easy to do, and it's easy for USDA to write them a check. For direct marketing and other people that have not been a part of the USDA system, this is another moment where they have to kind of think about if we want to be in or out, because to participate in these programs, you're almost for sure going to have to deal with USDA. It seems likely you'll have to get a farm number if you don't have one, which is certainly doable, but for a variety of reasons, some people are reluctant to do so. And finally, you're going to have to document, we think, actual losses due to COVID-19, and there will be paperwork involved with that. If people intend to participate in the program, it's something to think about starting now. So to move on to number 4, very quickly, this is our treasury checks that have gotten so much publicity with various names. I guess now people are settling on economic impact payments. There's really not much for us to add. We found the Treasury Department's website to be really pretty good if you're trying to track down what's happening with your money. There have been some complications. If you read the newspaper, you know, essentially poor people having some difficulty getting their payments, of course. And the thing that we would add from a kind of a farmer's perspective is that once that money is in your bank account, a creditor can take it just like they can take any other money. Now, the federal government is not going to do that, but for everybody else, it's like open season on a debtor's resources in their bank accounts. So that's not protected by the statute. They can take that just like they can take anything else. So with that, Lindsay, why don't you take the most complicated and possibly most important set of programs, Small Business Administration.
Okay, so the SBA programs, as I'm sure all of you are aware, the CARES Act initially rolled out two big chunks of money for two different programs, the Paycheck Protection Program, or PPP, and the Economic Injury Disaster Loan Program. And from the outset, I would say, you know, SBA doesn't have a long or strong history of working with farmers. And in many cases, farmers have been ineligible for different SBA loans and programs. So I think part of the challenge in thinking about working with farmers on this is that working with SBA could be rather unfamiliar for some farmers. So to keep that in mind. The other thing is that there's been a lot of confusion and chaos around these programs. And in part, that's because the funding has now come in two waves. So we had the initial CARES Act funding that came at the end of March. And then for both programs, for PPP and EIDL, that funding was exhausted by the middle of April. So then a couple of weeks later, Congress passed another law and put more money into the programs, and in some cases, specifically with EIDL, changed it in an important way for farmers. And I'll talk about this in a minute, but initially EIDL was not available for most farmers, and now it is. So there have been some rather important changes. But I'm gonna go ahead and try to explain what we do know. And again, there are lots of questions, but we do have a lot of information as well. So I'm gonna go ahead and start with the PPP program. And this is a program that was entirely new under the CARES Act. So this isn't modifying any existing SBA program. And this is a loan program with the intent of helping employers, and that can include sole proprietorships, independent contractors, as well as other small businesses, but to help them retain employees and pay their payroll for roughly 8 weeks. So the way this program works is if you apply, they calculate your loan amount based on 2.5 times your average monthly payroll expenses. And in general, they're doing that based on 2019 expenses. So you're getting roughly the cost of 2 months worth of payroll. And this loan can be entirely, you don't have to pay it back. If you follow their rules, they give you this money and then you are good to go. But it's important to understand what are the eligible ways to use that money. And so one very important thing is that at least 75% of any PPP funds that a person receives or a business receives must be spent on payroll costs. And that can include wages. It can also include certain benefits, vacations, certain medical leave, things like that. So definitely the majority has to be spent on payroll, but then the other eligible uses for PPP money include rent, utilities, and mortgage interest payments. So as long as the business spends the money that it receives on those eligible uses, then they do not need to pay the loan back. However, if someone were to receive money and they end up spending it on other things, or maybe they don't meet the 75% threshold for using it to pay payroll, then the loan becomes more of a traditional loan in the sense that there is a 1% interest rate. Then you have a 2-year term in which to pay that back. So that's sort of broadly how the PPP program functions. In terms of eligibility, like I mentioned, farmers are absolutely eligible for this program. Sole proprietorship, self-employed people, independent contractors, and most small businesses with under 500 or fewer employees. Since the farmers that we're working with probably tend to be in the category of self-employed people, I'm going to spend a couple minutes talking about the requirements, the eligibility requirements for that. And a few weeks ago, at the end of April, there was some additional guidance that came out that was specific to eligibility if you are self-employed. And this guidance listed 4 requirements for getting PPP money. The first is that you had to have been in business on February 15th of this year. So for extremely new operations, this program may not, you may not be eligible for it. The second requirement is that you must have some form of self-employment income. And again, that can come from if you are a sole proprietorship, if you are an independent contractor, but you need some form of self-employment income. The third is that your principal place of residence must be in the United States. And then the fourth requirement, and this is one we'll spend just a couple minutes talking about because it's a little more confusing. The fourth requirement is that you have to have filed or intend to file a 2019 IRS Form 1040 Schedule C or Schedule F. And Schedule C being sort of the general form that a sole proprietor would file their taxes to show their income and losses. And as you all know, the Schedule F is broadly the equivalent for farmers that shows their net income. And it appears that the reason SBA is using these tax forms is because they're trying to get a sense, remember this program is about payroll costs, right? They're trying to help people retain employees. So if you are self-employed, they want to know how much you're getting paid. And the way they are doing this is by looking at a specific line on the Schedule C and the Schedule F. And that is the line that shows your net profit. So for farmers who file a Schedule F, that is line 34. And the way this is working is if you do not show, if you're a self-employed person with no employees, if you show 0 or less on line 34 of Schedule F, so your net profit for the farm, you are not eligible for PPP. And again, it seems to be that their thinking is that, well, that would be your income and you're showing no income. So, we're not going to pay you if you're not paying you. That seems to be what the logic is. Now, it's slightly different. If you're self-employed and let's say you have a couple of employees, you can still receive PPP funds to pay those payroll expenses. But if you have 0 employees and you have shown no net profit, then you are ineligible. So that's there. And in our guide, we walk through it kind of in a little more depth how you can calculate that, and there's some good Treasury guidance that give examples on how exactly which lines to look at and how to go through to see your eligibility. But that's kind of the broad overview. And the other thing I would say on this is that unlike EIDL, which I'm going to talk about next, with the PPP, you actually apply directly with your bank. So although it's a US or a SBA program, you go through your lender or your CDFI to apply and to get the loan, and then SBA actually pays your bank back. So that's how that works. The ultimate deadline for this program is June 30th of this year. But as we've already seen, the funding for the CARES Act ran out. I don't think there's any reason to think that this second wave of funding also won't run out at some point. So I would say the sooner the better is probably good in terms of applying. So that's the PPP. I'm going to move on now to the EIDL program. And this program is different in a couple of ways. First, this program existed in some form previously with SBA, and the EIDL historically had been used when there were natural disasters. So one of the triggers of the program was you had suffered some sort of economic harm from a natural disaster. What the CARES Act did is it expanded and modified it. So it said, not only can you apply for this if there's been a natural disaster, but now we're adding COVID-19 as an eligible cause. It also expanded the program in that now you can both apply for a loan under the EIDL program, but you can also receive what SBA or what the CARES Act is calling an emergency grant. And this is something that's up to $10,000 that you can receive. And if you receive any portion of that, it's money that you do not need to pay back. So the way this program works is that on the loan side, it's a traditional loan that you have to pay back. There's no way to get it forgiven, but it's low interest. It's 3.75% or 2.75% if you are a nonprofit. This is a loan that's over a 30-year term, and what they're looking like, unlike the PPP, which was really about trying to help people cover payroll for 8 weeks, this program is about helping people who have suffered an actual harm. So one of the requirements is that you have to show substantial economic injury in order to be eligible for the EIDL program. The other thing about the loan, the maximum under the CARES Act is $2 million that you could apply for. Now, in actuality, there have been various news reports saying that internally SBA, as funding has run out, has been lowering that. Some journalists are saying it's now a $150,000 cap. Some are saying $15,000. We have not found any authoritative number on that, but under the CARES Act, it was $2 million. How SBA is actually going about administering the loans, that's one thing where if you're hearing things from farmers, please let us know, because we're also trying to understand kind of how they're rolling this out. Again, this program initially, when it was rolled out in the CARES Act, farmers were expressly excluded, so agricultural enterprises were not allowed to apply. When the second legislation was passed at the end of April, they allowed agricultural enterprises, which has a very broad definition to include almost any farm with under 500 employees. And importantly, when the new wave of funding came, initially SBA said, we're not actually going to be taking new applications because they had such a backlog from the initial application process. Then just this week, I believe it was Monday, they started allowing only agricultural enterprises to apply. So, we have this new pot of money. Most people are excluded, but for our purposes, it's really important to understand that agricultural enterprises can put in new applications now for the EIDL program. And again, I would say the sooner the better, just because the money has been exhausted. So in terms of what you can use the EIDL loan for, similar to PPP, there are specific uses that are allowed. For EIDL, you can also cover payroll costs. In addition to that, rent, mortgage payments, utilities, and then if there are obligations that you've had that you've not been able to meet because of COVID-19, so maybe certain bills or other debts that you had prior to this that you can no longer meet those payments, that can be eligible as a use for EIDL funds. So one of the questions that we have received on this is, how do the two programs interact with each other? Can you apply for both PPP and EIDL? And the short answer is yes, with kind of a big caveat. And that caveat is that if you get a PPP loan and you need to use at least 75% of it for payroll, and then you also apply for the EIDL loan, although you are eligible to use that money for payroll, you can't use funds from both programs for the same thing. So that's where the double dipping comes in. So if you wanted to get a PPP loan and use that for your payroll and get an EIDL loan to help with some of your other operating expenses, that would be perfectly acceptable. So it's just to understand that if you do attempt to use funds from both programs for the same thing, so for example for payroll, then that might be deducted from what would be forgiven on your PPP, if that makes sense. So I think that kind of covers broadly the EIDL. The very last thing I'm going to say on this, because I know the emergency grant portion is something that a lot of people are interested in. You apply for that, or you request that money when you fill out the application form for the EIDL loan. So it's a pretty simple, you mark how much you want. Again, in the law itself, it doesn't give a formula for how much you will get up to $10,000, but anecdotally, we are hearing that it appears that SBA is giving essentially $1,000 per employee. So that's something to keep in mind. Again, that's not stated in any of the laws, and if you're hearing different things, we would love to know. So the very last thing I will say on this is that unlike PPP, you need to have been in business on January 31st. So that's something to keep in mind in order to be eligible. And although this program technically runs to the end of this year, December 31st, I would apply sooner rather than later if it's something that any of the farmers you're working with are interested in. So I think that's it. If you have questions on these programs, please put them into the chat box and we'll try to get to them a little later.
So we move now to what on your list here is Roman numeral 6. And if you work for farmers and never dreamed that you would be dealing with small business administration, imagine your shock when you now understand that it's possible to work with your unemployment agency in your state and the Department of Labor. So here's this. The CARES Act, the big congressional effort to respond to the crisis, created something called pandemic unemployment insurance. And the very short answer to what the heck is this is that farmers, as unemployed, self-employed people, can technically qualify for unemployment insurance right now. And it's a weird program in the sense that regulations are created by the Department of Labor. They provide oversight for state unemployment programs all across the country, but every state has its own separate program with such different rules. I've tried to figure out whether there's anybody besides a state, let's say a tribe, that's actually doing unemployment programs. I haven't heard of one, but I could be wrong. So for almost everybody, you're talking about applying with a state. We have on our outline here a link where Department of Labor has a map that sort of tells you where you can find your unemployment office, which we think works pretty well. So here is the gist of the program. If you are self-employed, farmers are generally self-employed, and you're going to be eligible for unemployment possibly. And so while the big discussion about this has been the extension from 26 to 39 weeks, the extra $600 a week unemployment, hidden in there is this pandemic unemployment aspect for self-employed people. And they borrowed this from disaster rules. There's a similar program when there's a declared disaster. FEMA gives money to states. States run unemployment insurance for disaster, self-employed people. And what our experience is, working a long time on disaster stuff, is that the states kind of don't believe it. I mean, at first. We're not hearing people turned away yet, but we expect to. The state departments are overrun with people. They are going to be scratching their heads about farmer eligibility. So you kind of need to push. As happened with disaster stuff, and eventually the states tended to come around. So here's the deal. You have to be self-employed. It needs to be your primary income. And you have to be unable to work because of the COVID-19 crisis. And so that's a little bit of a tricky set of rules. So for example, if you have the virus, definitely you can't work. If someone in your household has it and you're providing care, also the case. If you've been told to self-quarantine, you can't work. The interesting question is the extent to which the disappearance of your markets might be a reason that you, in theory, can't work. And so the Department of Labor addressed this question sort of when they tried to figure out what to do with Lyft and Uber drivers. And what they decided was those people are self-employed. They're independent contractors and they're self-employed. And Labor said, okay, those people can apply. And so our sense is, and we don't have anything official on this, is that if you're a farmer and you sell at a farmer's market that's closed, or if you sold to a school that's no longer buying, in other words, if your market disappeared and you can no longer market your goods, we think it's worth trying the unemployment option. There's no guarantee you're going to get it, but we think kind of go for it. The forms are not that difficult. And then if you get turned down, let us know, and we would be very interested in helping you and having a little chat with your unemployment office at the state level. So that's pandemic unemployment insurance. Number 7 on our list, discussed in Chapter 5 of the guide, is something that also comes out of federal statute, which is brand new in the so-called CARES Act, and it's a foreclosure moratorium and forbearance for people with residential mortgages. So essentially what's happening here is the CARES Act is creating an ability for people with a federally backed residential mortgage, and we'll break down those terms here in a second, to protect them from foreclosure and protect them from going into default because they can't make payments. Now, interestingly, there's no agency that regulates this. It's a little bit of a free-for-all. I'm sure we're going to come to the day where people have to argue what a lawyer would call an affirmative defense to a foreclosure or a delinquency. We'll come to that road when we come to it. But for now, it's federal law that this is actually the way things are supposed to work. The Consumer Financial Protection Bureau, which does not enforce the statute, has done a very nice summary of its provisions and how to use it. And so I would suggest that you look there. So let's talk about for a second about how this really works. To be eligible, you have to have a residential mortgage, a home. It has to be federally backed. That means either it was made or guaranteed by a federal agency. So all your VA loans, HUD loans, your USDA rural housing loans, all those qualify. And you qualify if Fannie Mae or Freddie Mac essentially bought or securitized your mortgage. And so without going into all that meaning, let's just say that Fannie Mae and Freddie Mac have an involvement in 60%, 2/3 of the residential mortgages in the country. So most people, if they have a residential mortgage, it's federally backed. Not everybody, but most. And if you do, it means there's a foreclosure moratorium that started on March 15th or 18th, one or the other, 18th. It extends for 2 more months. It's 2 months after that, so it's soon to run out. When Congress takes this up again, it might be a nice idea if they extended it further. The other thing that this statute does is offer forbearance. And so what forbearance means is that you don't have to make your payments for 180 days. You need to apply for this. You need to ask for the forbearance. But the way we're reading it, it's like almost everybody's going to get it if they've had financial setbacks because of COVID-19, which is to say almost everybody. So you don't have to make these payments for 6 months, essentially. You have to claim financial hardship. Now, it doesn't mean that debt goes away. It just means that they can't put you in default. They can't add extra fees. They can't penalize you in any way for not making a payment for 6 months. And actually, you can ask for it to be renewed again for another 6 months. So it's not a panacea. It doesn't get people out from underneath their mortgages, but it gives you some breathing room, and it's a pretty powerful piece of the statute. The interesting question that we posed was, well, what does this mean if you have a farm mortgage? That is to say, you have a federally backed residential mortgage. It's just that the mortgage also includes a lot of other farmland. Does this protect you? And the way these agencies are understanding it, the answer seems to be universally no. So you have this very odd moment where you could have a farm and you have an FSA farm loan FO mortgage. You are not protected by this because the mortgage is not mainly for residents. It is mainly for a farm. It just happens to include a residence. While down the road, you could have another farm. They have instead a rural housing loan that's just a mortgage on the house and little else. And then they have other FO loans for their, other loans. Those people down the road, their house is protected under this. But if you have an FSA farm loan mortgage, it is not. So it's a weird anomaly. Basically, everybody in America who has a federally backed mortgage on their home is protected from foreclosure and gets forbearance unless you're a farmer and have a farm that's a part of your loan. Thank you very much. I assume people didn't really think about this when they wrote it, but that's what they did. Okay, Roman numeral 8 here is regulator guidance for lending institutions. So one of the themes that I think, and this is just your lawyer coming out here, is down the road, we're going to face a lot of financial difficulties. And those difficulties are largely going to be debtor-creditor related. We have people that aren't going to be able to pay back loans. There'll be consequences from that. We have people struggling for operating money. It's going to be a crunch. I mean, interest rates may be low, but that doesn't mean anyone's necessarily borrowing or lending, and it doesn't mean that your lender is going to work with you. So we have a very confusing banking system in this country. Lots of entities make loans. They're almost all, or at least mostly, let's just say, regulated by the federal government. And it's a hodgepodge of agencies that do it. Farm Credit System has its own regulator. Federally chartered banks have the Federal Reserve. Other institutions have other entities. But they are regulated, and these entities have interestingly issued a number of statements providing what they're calling guidance for the lenders. And what the guidance says is that if you're a lender and you have people who are struggling due to COVID-19 crisis, you should give them a break. We, as regulators, will not hold it against you if you, the lender, start writing down loans, rescheduling loans, making some accommodation for people who are struggling. We will not hold it against you. In fact, we encourage you to do so. And so the language here is actually quite good. I mean, it's we're talking about deferrals, delaying payments, restructuring loans, making small dollar loans in emergencies, doing workouts, which means writing debt down or extending the payments. You even have some language here saying that they should make an accommodation for small businesses and small farms. So, lenders are a wide range. We have big institutions. They kind of need to be prodded to do the right thing here. And we have small institutions who would love to do stuff and maybe are just afraid of the regulators. Both of them, can do a better job, I think, with a little bit more knowledge. I would also add that if you remember the Community Reinvestment Act, it regulates lenders. It says that if you're going to be in a community, you have to provide your services to everybody. Community Reinvestment Act guidance from these regulators says if you make accommodation to borrowers affected by COVID-19, or if you extend credit, we will give you sort of good points on your Community Reinvestment Act evaluation. So I think there's some room here for some advocacy, and there's some room for some education of lenders. And, it's no panacea, but it's a piece of the puzzle, I think, in our looming credit crisis. Roman numeral 9 is USDA administrative response. Here we're talking about the things that USDA has done that didn't require a change on federal statute. It's like the statute is there. They just have certain flexibility, which they have in part used. I mean, I personally hope that they do more here, but they've already done some. And so let's just run through what that is. The first thing to emphasize is that after a long period of back and forth, a farm bill started to require USDA to have a receipt for services when people asked them about a program, asked to participate in a program. And to be blunt, the reason for this is that USDA had a history of telling people they weren't eligible for things, that they didn't have enough money, people walk out, there's no record of any interaction. You have a very decentralized system here, county by county. It was a formula for treating people unfairly, frankly. And so the receipt for services was designed to end that. Now, of course, nobody's going into an FSA office. They're all doing it by phone. And USDA says they will begin to do receipt for services documentation based on phone calls. I think that's a good thing. If people have experience with this, we'd be curious to know kind of what's up. So regarding the loans themselves, again, remember, we're probably headed to a credit crisis. You're going to have people that are going to need direct or guaranteed loans, and you're going to have people that are already borrowers. So the changes with the direct loans, getting loans, it's not huge. I mean, they are extending some deadlines. They're being a little bit more flexible on repayment and prices, but nothing immense. If you're already a borrower, this cannot be emphasized enough. The whole loan servicing system will still go into effect. That is to say, if you go late on your payment, they are going to send you a big packet of materials. It is essential that you fill those out, pay attention to them. Do not ignore stuff just because we're in lockdown. Creditors, including USDA, will still proceed. Now, it is true that USDA is saying for now they're not going to foreclose on people. They're not going to accelerate the loans. I mean, they're doing some good things, but boy, you've just got to respond, when you're confronted with stuff. Guaranteed loans is a somewhat different story. As we know, the banks make those loans and USDA regulates them. You've got a lot of debt out there that's guaranteed loan. One thing that USDA has told the banks is, don't forget, you can service these loans. You can extend payments. You can reschedule. You can do write-downs and get the same guaranteed payment as you would if you foreclosed on people. It's been a long-standing flag issue that guaranteed loan lenders don't look at loan servicing as closely as they ought to. We think it would be great if there's a little bit more pressure on guaranteed loan lenders to service loans and be accommodating here. Right now, there's a bit of that, but not a great deal. And we hope that USDA does more. Moving to number 10, crop insurance and NAP, non-insurable assistance program. I think I botched that, but so you have crop insurance, huge program with USDA. Don't forget, 2/3 of your premium for crop insurance is paid for by the federal government. If you can use crop insurance, if it fits your farm, it's a good deal. NAP is what FSA does to do something kind of similar when crop insurance is not available. So the first thing to say here is that COVID-19 in general, in your typical crop insurance policy, is not an insurable loss. If you had a drought, if you had a flood, yes. If you have a COVID-19 crisis whereby you lost your market or your price declined by 1/3, you're basically out of luck, except for the few policies that take into account the price that you receive. So the crucial thing here is to understand your policy. People who have 2020 crops, they're already in most cases, they already have crop insurance if they're going to have it. So what I really hope to emphasize here is that you may have a rational response to the COVID-19 crisis, which is to say, I'm not going to grow this crop I propose to grow because there's no market for it. So as a sane person, I'm going to try to grow something else for which there is a market. That's great. The most important thing you can do regarding your finances, though, is to tell your crop insurance provider or tell FSA if you signed up for NAP what you're doing, because you are in danger of violating your crop insurance agreement and having no coverage if you start changing your operation and do not fully inform your crop insurance provider. And remember, this is not USDA who sells you crop insurance. It's these local insurance providers. You got to talk to them. And if you get a confirmation of any sort of change in your operation, I very much urge you to keep it, to write notes, to take care, to document this sort of interaction, because it's a big deal. If you let's say we have a flood or we have drought, you deserve crop insurance, you paid for it, they could deny you if you violated the terms of your agreement. I hate to be a Debbie Downer on this, because actually crop insurance is a great program, but here's a moment that you really have to be careful. All right, Roman numeral 11, we're about wrapped up here, is state, local, and tribal courts. And here we come to our debtor-creditor issue again. Courts are still functioning, and they've changed their rules, they're doing things remotely, etc. But insofar as people have credit problems and have trouble paying off debts and everything else happening to them, courts are still functioning. That means if you get a summons about being late, if somebody is trying to get a judgment from you, you cannot ignore this stuff. You can never ignore it. And now is no different. So you want to pay attention to how the rules may have changed in these various court entities, but please, please, please don't ignore stuff because you feel like it's bad news. You can't leave the house. You can't go off your property. You know, how am I supposed to go to a court? Don't think that way. I mean, you know, it's a rational way to think, but courts have not stopped functioning. You got to respond to stuff. We're going to have a lot of lawsuits. You know, I hate to say this, but I can tell you there are already lawyers excited about the litigation all this is going to cause. If you're a licensed lawyer, you're already receiving continuing legal education materials, offers to try to get you to litigate some of these cases. You know, the lawyers to the rescue, I guess. Also, you're going to have some state, local, and tribal programs. You know, we can't cover those in our guide. It's just too much detail. But states are doing things, changing rules regarding debtor-creditor rules, all sorts of things. And they're mainly going to be targeting consumers and homeowners, but that doesn't mean they don't apply to farms. So, you know, just be alert to that sort of stuff. Rules are going to change. Scams. I hate to bring this up, but on Roman numeral 12, you know, since I've been doing this work beginning in 1993, one of the most common reoccurring problems has been people cheating farmers when farmers are in a time of desperation. So the old line, if it's too good to be true, sounds too good to be true, it probably is true. People need to be careful. They need to pay attention. I know in recent years we've had an increase of what people are calling unconventional lending. Fair enough. You know, that can be everything from John Deere financing your equipment down to something that seems a lot more like a Ponzi scheme. People have got to pay attention. If you're going to sign a loan agreement, please, please, please read it. That's always true. But if it's from an alternative type of lender, it's an especially important thing. And if people come to you and say they have this great deal, I'm going to get rid of your mortgage, all you have to do is pay me $400 and we're going to do this lawsuit, please, please be wary. Check people out. This happens. It happens. Roman numeral 13 is discrimination. You know, there's a tendency in this country to think that all farmers are white men. We know that's not true. We also know as well that institutions such as the U.S. Department of Agriculture, banks, other lenders, everybody sort of in the commercial agricultural commodity chain setup has had problems with discrimination. And, you know, USDA has paid out billions in settlements. You know, our experience at FLAG, hearing from people, we don't see any reason to think that that discrimination has come to an end. My thought here is just to remind you that it's not only morally wrong, it's illegal, and we shouldn't tolerate it. And so you have a legal right not to be discriminated against. Finally, Roman number 14, I just thought it makes sense here to take a step back and remember that we've had a lot of money roll out. We have these programs that are created on the fly. Some of them incorporate appeal systems, maybe almost by accident, like USDA. Nobody in Congress thought about this, but these payment programs may be a part of NAD. I don't know. We'll find out. SBA has its own appeal system. It's unclear whether it's going to apply here. In some instances, we don't really know, you know, what sort of accountability measures will be included. A lot of money, not a lot of good specific rules about how to assert your rights if you believe you've been wronged. It's something that we're going to try to keep track of and put a lot of attention to. You know, these programs are great insofar as they exist, but let's make sure that they're available to everyone and available fairly. And that is the end of the Roman numerals.
Great. So we've reserved the last half hour of the time allocated for this webinar for Q&A. I would encourage folks to type any questions you have in the chat box. And in the meantime, at least Maddie, check me on this because we haven't received any questions in the interim. Is that right? That haven't already been answered? Yeah. And so I think one thing I want to just underscore for this community is how important your eyes are on what farmers are experiencing, because when people are under stress and severe stress, they're not necessarily making the best decisions just because of the nature of things, right? So when we talk about things like scams and scam artists coming around, or folks not dotting the I's and crossing the T's on their applications, things that maybe normally they would get right, it becomes really important what we do as service providers in being there for farmers. We may find that we need to actually fill out an application for someone who generally has been very capable of filling them out on their own. So we just need to sort of create space and think through what our roles are, and start anticipating that we see stress compound over time in terms of natural disasters. And what we also see is that that stress level ends up being about the same for service providers as it is for the communities they serve. And so within your own staff and in your own teams, anticipating what the compounding stress will be. We have a question: are flag services free to farmers?
And the answer is yes. And the big caveat is that we can't be everybody's individual farmer. We do a lot of short advice for which there's no charge. There could be some particular circumstances where we could actually be somebody's lawyer, but it isn't something that everybody, that people should just sort of assume. So everything that we write, this guide, for example, it's all at no charge. Frankly, our main work is with grassroots farm organizations, not a lot of individuals, but we answer a great number of questions and try to point people in the right direction, give them a basic answer. Sometimes we're able to make a good referral. So we do a lot of that, and we don't really advertise it like I'm doing right now, I guess, but people still find out who we are and they call us and we talk to them, do the best we can. I hope that answers the question.
Excellent, thank you, says Amelia. You all are able to unmute yourselves if you have a question coming up organically. I think, it's not a tight group, but it's, I think, small enough that it's manageable for people to unmute themselves and mute back if you have questions for folks at FLAG. Has anybody on this call been working on helping farmers access the SBA programs that are available?
This is Christina at PASA. Yeah, we've been working really round the clock helping folks access SBA. And of course, the first round, like Lindsay said, was not available, of EIDL loans was not available to farmers. So just recently we sent out a couple of mass messages letting people know that now it's available. A couple of farms or businesses that were eligible did apply when the first round of funding, when the application was still open. And most of them that we've checked in with have actually said that they haven't heard anything back from SBA yet. So a lot of our questions at this point for folks who have applied for EIDL is, how long am I supposed to wait without hearing anything back? And our guidance to them is essentially just keep waiting because they've said that they're processing them as they can, and they've definitely said don't apply again. If you have a contact at your SBA office, you can try calling them. Even PASA, who has really close relationships typically with the SBA office, we have a really hard time right now getting in touch with an actual person there. It's 2 weeks before they'll respond to an email, and no phone calls whatsoever. So it's been really tough for folks to put this out there and then just sort of they can't plan around it. They don't know if they're going to get it or not. And that has been that part of that stress that Alicia talks about. PPP loans, a lot of farms have had difficulty with that as well. A lot more folks have successfully gotten it. But one of the things that farmers are finding is that you know, they essentially don't operate having any positive net income, which on a normal basis means that they're not paying taxes, which is a good thing for their business practice. But now they're seeing that there's, you know, other negative sides to that because they have no income to claim. They're not eligible for any kind of PPP money. And so those have been sort of our two main takeaways with working with the SBA programs at this point.
I just wanted to add to Christina's point there that it's a very good point that you made about EIDL. If you submitted an application when you technically what wasn't available for farmers, and now it is available, you don't have to do it again. Now that's, I mean, they say that straight out. It's one of the first questions that we had. It's like, well, did they delete everyone before? Now are people supposed to apply again? Is that going to seem like double dipping? And the answer to the question is, if you submitted, you should be good. It's an important question.
I'm just going to share this real quick because Spencer asked the question about this digest. So as mentioned at the top of the call, the full flag guide that they went through is what, 68 pages? It's you wrote it one night, yeah, 68 pages. And so we worked with a community of folks, including Farmers Legal Action Group, but also several others to, one, recap general guidelines about navigating a moment like this. Sorry, I can make the view of this better. I'm still learning the best way to, not that way. Okay. Things that we've learned over time in helping farmers navigate moments like this. What we've created is this quick guide that anyone should feel free to make available to farmers in your networks, in addition to the full flag guide. Both are intended to be plain language and understandable to anybody. The first page or two are general guidelines and then key contacts. And I think together as a community for the Farm and Ranch Stress Assistance Network, we could work on sort of expanding some of what these are for folks in our network. And then the second front back is a matrix of these different programs and basic pieces about eligibility and how to apply. Farm Aid, and we know several others, are in the process of distributing relief checks to farmers. And so one of the things we're doing is ensuring that this is included with every check so that the farmer has what they need, and so that the service providers who are working with us have the information they need to best serve them. So I just wanted to share that very quickly. And then, Maddie, I'm going to hand it over to you to sort of field the additional questions. The link to the guide is in the chat box, and Maddie will share it again.
Yep, I just shared it. But we did have another question that says, a lot of farmers are having ongoing questions about H-2A workers, getting the PRIME Act passed, and working on other supply chain concerns, such as packaging.
Speaking for Flag, go for it. That, I mean, we did not write about H-2A, and we did not write about meat processing in this. You know, I couldn't agree more that many other topics need to be addressed. So I'll say again, go for it.
Just so folks know, because there's been some questions to me privately, this is something that we're recording and are going to be making available to the Farm and Ranch Stress Assistance Network. I think Farm Aid will probably put this as a link on YouTube that's not publicly shared, but anyone who has the link can view it. So if others in your staff want to be viewing this, or you have others that you think would benefit from it, we'll be able to make that available so folks can access it.
Could I make a comment?
Yeah, I would say as people chime in, just share your name and your organization.
Thank you. Richard Wilkins, Delaware Farm Bureau. First, I just want to commend you on a very well prepared and a great presentation. It was lots of good and accurate information. A comment, you did comment that the Small Business Administration is unfamiliar with how farms tend to operate and how the volatility and variance from year to year of income can be. One thing that I suggested early on, but it didn't get any traction, was to allow farms to be able to use a 3-year averaging of their income in order to be able to qualify for a more fair amount of idle loan. So I would just suggest that if anybody else has people in their network, either in SBA, USDA, or Congress, to maybe amplify that, to give the farmer the option of being able to use past 3 years, because in many cases, 2019 was not the best year for agriculture in the past 3 years. Thank you.
Yeah. For those of us who do some federal policy advocacy, I mean, you know, having to documenting losses is always important, and we also know that usually safety net structures for farmers never recoup you 100%. It's even more challenging in a window where, for example, in the dairy industry, which is quite prevalent in this region, there's been below cost of production prices for those growers for 5 years, 6 years. And so you can document price losses over any kind of period and still not enough to actually cover anything near your cost of production. So we've been trying to just in general push for pretty aggressive actions for those who are in power and able to do emergency or write down or reworking and restructuring loans, because it has been such a nightmare window for farmers across the board. Other questions? I highly recommend tapping the brains of flag folks when you've got them on the line.
Thank you for putting the guide together. It's amazing.
Nice of you to say. It seems like there are people using it. We're a tiny little law firm, a nonprofit law firm, and actually, there are a lot of people downloading it. So it's great to hear. It seems like it's being useful to people.
Yeah, and I would just say, I think as Stephen mentioned, we know that this is probably going to be one of very many versions. They're already on their second version of this. When new information comes out about the CFAP program out of USDA, there's likely to be another version. Same goes for the quick guide that we pulled together, that 4-pager. It's really helpful, I think, for us to keep communicating as a community about what we're seeing, so that we can be providing the best materials and giving the best possible advice.
It seems like we're maybe coming close to an end. One thing that I would just emphasize for folks is that, to the extent that you have questions or you have on the ground experience, and the farmers that you work with have on the ground experience with really anything that we're talking about here, we are super interested to hear about it. I mean, we are, this is a big country, and there's a lot going on out there, and there are 2 million farmers, and folks like you are the only way that we know really what's up. So, maybe it's a question, maybe it's not. I mean, there are rumors that have floated around about various things, and that Treasury or somebody else or SBA has done informally. And, you know, it's just really good for us to hear actual examples of stuff happening.
We do have a question from Lisa Jones. Is there an expected date on the next version of the guide already?
I think we can, oh, go ahead, Stephen.
Go, Lindsay.
I was just going to say, I think what we know is in the pipeline are the rules for CFAP. I mean, we don't have an exact date on that, but as soon as those come out, we'll be working on another edition. So I can tell you, hopefully shortly after those rules become public, there'll be another edition, but we're not planning on doing one before then, unless there are some other big changes to any of these programs that could affect farmers.
Last call for questions.
This is Megan. I totally blagged this webinar, and thank you for letting me. And just, I have to give a shout out to Farm Aid and Flag for answering all the questions that everyone is afraid to ask, and not just answering them, but giving all the information as well. So thank you for providing this and for making this available afterwards, because these questions will come up over and over again, and here are the answers. Thank you.
Thanks, Megan. Thank you. I think folks should feel free to hop off. We'll keep the line open for another couple minutes if folks want to ask questions. We will be sending a feedback survey around to everybody, and we'll also be sharing a link to this recording. For those of you in the Farm and Ranch Stress Assistance Network, put your thinking caps on. We've got a lot of hustle between now and when the next proposal is due about how we can build out our programming, since now we know NEFA's opened up their round. And anyways, regardless, want to keep hearing ideas about how we can best connect the dots between the vast expertise in this network. There's really just so much knowledge here. So hope you all found this helpful, and there'll be more from us soon. So let's just hang on for a second.
Yeah.
I'll enable the waiting room if we need. Oh, you're welcome, Amelia.
Maddie, we never heard from you in this.
Sorry.
I know, sorry.
So how many do we have on? I never looked.
40 at the most, I think. Oh wait, let me stop recording. Hold on.